Is Brazil's economy collapsing? Well, a lot of people are saying that, so I thought I'd do a video to investigate what's actually happening. So one of the things that all the newspapers and the news on the TV here in Brazil are talking about is the Brazilian currency devaluing. So Brazilian currency is called the Brazilian real, and when you compare it against other foreign currencies like the US dollar, then it's become significantly weaker against the US dollar recently. So at the moment, it's about 6.2 Brazilian reais to 1 US dollar, and that is very high. Now, this weakening of the Brazilian real has happened over a number of years, but recently in 2024, that deterioration has accelerated. I mean, I remember many years ago when the exchange rate was like 2.5 Brazilian reais to 1 US dollar. I mean, that was at the time when the Brazilian economy was doing really well. Everyone was talking super positive about Brazil and how it, might challenge China in terms of its economy. But then since then, Brazil's had a lot of challenges. So it's had some political instability, so they impeached the president. There was this big corruption investigation involving lots of politicians. And then obviously you had the pandemic as well. And then more recently, the national debt, the government debt of Brazil has increased significantly. And all of these things have resulted in the Brazilian currency weakening. And now it stands at over 6 reais for $1. But it isn't just the Brazilian currency. There's also other things like inflation and interest rates. So if we look at inflation, so you can see on the chart here that inflation increased significantly in 2021, 2022 due to the pandemic, which kind of happened in the majority of countries around the world. And then as the central bank increased interest rates, that inflation came down. But then inflation kind of stopped declining and kind of plateaued. Many economists and the central bank, they were hoping that it would carry on declining and then kind of stabilize at a lower rate. And then recently there are signs that inflation is starting to pick up again, which you can kind of see at the far right of the graph. So this is also worried economists, the central bank and the market. And actually part of the increase in inflation is connected to the exchange rate. So with the Brazilian real weakening, imports become more expensive, which puts pressure on inflation. Obviously, there are many other factors as well. So now with inflation starting to pick up again, the Brazilian central bank has had to increase interest rates again. So you can see on this graph here, the interest rates of the central bank in Brazil. Interest rates fell significantly down to 2% at the beginning of the pandemic in 2020. And then interest rates rose significantly, like in most other countries as well, to deal with the inflation. And then recently they started to reduce down the interest rates slightly, but now they've had to increase it again because of the inflation picking up. And this is not good news for the economy, because many were expecting the central bank to keep reducing interest rates as inflation continued to decline. And that would help the economy because loans would be cheaper for businesses and people for buying homes and other things. But now with interest rates going up again, that's gonna slow down the economy a bit at a time when the economy needs a little boost rather than the opposite. So the forecast for Brazil's GDP growth in 2024 is about 3 to 4%. I think the official figure comes out in kind of February, March time this year. And that's a decent growth number. But then the forecast for 2025 is that it's going to be about 2%. So they're forecasting for Brazil's economy to grow at a slow rate this year, which is significantly lower than other countries. So if you look at the BRICS, so China, India, they're forecast to grow much higher. I mean, Brazil is beating Russia, but to be honest, I don't think that's too impressive with all the things happening in Europe. So yeah, for Brazil's economy to grow at 2% isn't very promising. And many economists have come up with many reasons why all these things are happening. So why the currency is devaluing, why inflation's going up and the economy is slowing down. And one of the main reasons, which everyone's talking about at the moment, is government debt and government spending. So the Brazilian government is spending more than what it's getting in from taxes, and that is resulting in the government debt increasing. The gross Brazilian government debt is standing at 9 trillion reais, which is $1.4 trillion, and that represents more or less 87% of Brazilian GDP. Now this rate is relatively high, but there are many countries with much higher rates. So in Japan it's 255% debt to GDP, in Italy it's 144%, and in the US it's 123%. So there are lots of countries with a much higher ratio of debt to GDP. However, a lot of these countries, they pay relatively low interest rates on this debt compared to the Brazilian government. So the result is that the interest payments burden on the Brazilian government is very, very high. So you can see here, Brazil is at the top compared to all other countries in terms of interest payment as a percentage of GDP, which is at 6%. So many economists and the markets are worried that if the Brazilian government keeps on spending more and more and more and has to increase its debt even further, then these interest payments might start to cause problems. Because it's kind of a vicious circle, because the government has these big interest payments to make, they're not getting enough money from taxes, and so they're having to take out more debt to pay for the interest rates, which increases interest payments even more, and then it's just a vicious circle. And so there's a lot of pressure on the Brazilian government to reduce spending. And they did come up with various proposals recently, and the market and economists, they were positive about these spending cuts. I mean, obviously they wanted more, but what happened was that the government announced these spending cuts, but at the same time they also announced that they would reduce down income tax for a certain proportion of the population, which would mean that the government would receive less money in from taxes. And this shocked the markets a bit, because they were just expecting expenditure cuts and not cuts to tax revenue for the government. And this reduction to income tax was for the less well off. So anyone earning up to 5,000 reais, which is $800 per month, would no longer need to pay any income tax. They would be exempt. Currently it's about 2,200 reais, the exemption, which is $350. So they're more than doubling this exemption, which in general is a positive thing, I think, to reduce the tax burden on the less well off. However, at a time when the government needs more money, that is a bit difficult. However, they did say that they would increase taxes on the more well off. So anyone earning over 50,000 reais per month, which is $8,000 per month, the taxes would increase. I didn't go into specifics and whether that would offset the loss of revenues from the other tax changes. So the end result was that it was a negative reaction against these expenditure cuts and tax changes, and the Brazilian real just lost more of its value. In general, people like to keep things simple and just have one reason why things are happening, but that's usually not the case. So there are many other reasons why Brazil's currency is devaluing and why inflation is picking up and the economy slowing. I mean, you've got the election in the US and the new president coming in, and the risk that maybe tariffs will be put on Brazil, on Brazilian exports to the US. And so that's causing a lot of uncertainty as well, which makes Brazil more risky to invest in. So investors pull out some of the money from investments in Brazil, affecting the Brazilian economy. And then you've got some of Brazil's big trading partners like China, with their economy slowing down as well. So they're buying less Brazilian, raw materials and products. So there are many other reasons as well, which I'm not going to go into in this video. But in conclusion, there are definitely a lot of challenges for Brazil this year and the coming years. And this will potentially have a big negative impact on the Brazilian population if things start to deteriorate. But Brazil has not gone into some economic collapse. Yeah, things are getting challenging, and there needs to be a solution from the government. And also, I've now lived in Brazil for a number of years, and there's always some sort of crisis in Brazil happening, but the country and the economy just manages to keep on going. So hopefully this is also just another one of these kind of mini crisis which eventually gets resolved. And also this highlights how important it is to be financially independent. So you're earning income from various sources, and you're not super worried about, losing your job because the economy's going down, or you're super worried about your investments because you've just invested in the Brazilian market. So if you have income from various sources and invested in lots of markets around the world and different commodities, that will act as a protection if Brazil or another country starts having problems, and you can still sleep well at night knowing that you financially are secure. And I've done various videos explaining how I've managed to reach financial independence. And I'll leave a link to a few of these videos in the description below. So if you like this video, please leave a like, subscribe. If you've got any questions or anything, leave in the commentary below. So thanks for watching. Until next time.